Hey everyone, welcome to the first session of PTC Ottawa's Finovate track at Discover Tech 2022. We have a multitude of sessions planned in line for you over the next 2 weeks, so we hope you enjoy. If you are still looking out for more, then do look out for some of the other regional tracks running throughout these 2 weeks as well. But some of the tracks that will be covered, we'll talk about topics like AI, biomedical technology, gaming and design, and much more. Now, without further ado, let's begin with today's session where we will be hearing from Alex Leduc, who is the founder and the CEO of Perch. Perch is a Canadian-based company that helps people make better decisions with real estate through their analytics-driven digital platform. Prior to starting Perch, Alex worked in the real estate sector for 9 years in various corporate finance, strategy, and analytics roles. Furthermore, he is a graduate from the Ivey Business School at Western University and a CFA Charterholder. Please join us in welcoming Alex Leduc.
Awesome. Well, thank you for having me. Good to be here. Awesome. All right. Well, I guess now that you all know a little bit about me, I'll jump right into it. So I picked the focus of this presentation to really just talk about the property technology space, kind of our journey going into it, and kind of what that area could hold for any of you that might be interested in that space as well. So I'll start off with maybe just a little bit about like what is the actual space. So at this point, there's a word with the word tech after it in pretty much any sector you can think of at this. So I'll maybe just focus on the two that Perch sits in. So the first one is financial technology, which is just short form for fintech. So really, this is the improvement of any financial services at its baseline. So banks, credit cards, online shopping. For us, it would be the mortgage component. So we enable people to use to get mortgage financing more effectively and optimally, because sometimes there are a lot of credit parameters that people don't meet in the regular space, where we can actually come in and connect them to different lenders that would be able to help them in their situation. And proptech, or property technology, is when it's relating to the real estate space. So this can be all the way from, if you think about the beginning of a real estate project, which is the land, it can be sourcing the land, how to build it, the construction component of it, selling it, buying it, reselling it. So really anything relating to the life cycle of the real estate as it from start to finish. And when you combine the two, you have properties and then the financing of those properties, which is really kind of the combination of fintech and proptech, which is where Perch really sits in. So technology playing a role in the real estate industry, like I talked about, there's the whole life cycle of real estate, but it's actually also the utilization and the let's call it the enjoyment of real estate. So there's people that own it, there's people that rent it. How do you help those people find the right property? How do you help renters find the right property? How do you help tenants get evaluated by the landlord? There's also like the actual, so let's talk about like a visual and or virtual and so VR and AR, which is in the staging space. So instead of needing to spend thousands of dollars to put properties up for sale, what if you could actually see the property with the characteristics that you would prefer, such as paint colors, the right couches, the kitchen table, everything, without it needing to be actually physically be there? Properties that were listed for sale, if you go all the way back in time, it actually was just in the newspaper. You'd have to essentially know somebody who knew who was selling the home. Today, you've got tons of apps that are enabling you to set certain criteria, filters. It'll recommend houses based on your recommendations. And not to mention the fact that you can buy properties like on a global level. That wasn't even possible that long ago, where if you wanted to go move to Texas, you could just go start looking at homes today, where that wasn't even wouldn't even have been possible not that long ago. Getting a mortgage is obviously an area where the technology plays a huge component of it. It started off as rate comparison tools where you could see what one lender is offering versus another. But now getting a mortgage is a much more impactful component, because housing affordability is so difficult with the appreciation of housing prices. So it's much harder for people to get a mortgage today because the qualifying process is so much more difficult. So we're able to help people. So getting a mortgage is really a matter of how do you, get the best rate, but also how do you actually even get into the market? Finding a place to rent or buy. So it works both ways. What's setting your criteria versus what is your, let's say, a landlord looking for, so we can help people match up. And then smart home technology is really about the enjoyment of the property. So real estate is, as a sector, especially with technology, is massive in regards to the areas where you can be involved as it relates to real estate. So speaking to Perch specifically, our team works in the real estate process when homes are already built and sold. So we help people find the homes that they want to live in, not necessarily from a search process, but we qualify them on the mortgage side. Then we get them pre-approved, which enables them to go start looking at properties. We connect them with realtors that would actually show them the homes that they're looking at, or the client can already, maybe they already have a home in mind. They might be buying a pre-construction. They might be going directly to the builder. And then once they have a property, we get them the mortgage that they need to actually close. And then post-closing, we're giving them analytics on how to maximize wealth as a homeowner. So this thing could include, think of like your stock portfolio. So a lot of people know what their stocks are worth, but most people don't know what their homes are worth. So we're giving people monthly portfolio updates so they can see the equity that they've built in their home. So I bought this house a year ago. How much is it worth today? How much have I paid down on my mortgage? This helps people get a good sense, let's say, of what their net worth is as it relates to their real estate portfolio. And then and so that's really kind of our core, is we're helping people maximize wealth as homeowners. Whether they own a home, we help them get in. If they own a home, we help them maximize wealth after the fact. So as the focus of this conference is really just in regards to, like, what do I want to do when I graduate? I'll maybe emphasize some of the careers and salaries that are there in proptech. So one, there's a huge, I'd say the proptech space got hot maybe about 4 years ago, is when a lot of money started pouring into the space. There's a lot of different roles. So whether it's the engineering side, the product side, the design side, there's also the operations. So the operations is, if maybe you wanted to be a realtor, maybe you wanted to be a mortgage broker. I guess funny enough, like, most people typically don't go in being like, I want to be a mortgage broker, I want to be a realtor. It's something that they discover later on in their career. But with that being said, there's a big shift in the salaried roles, which will be more like, let's say, the product managers, the software developers, anything like that on QA side. And then there's more of a commission or a sales component. So that's also something you can look into when you're looking at a career, because there's more risk, but there's more reward. So top producing realtors and mortgage brokers can be in the hundreds of thousands or millions of dollars of income. But it's all based on if you're closing volumes, and it takes time to build a pipeline like that. It's very similar to how a wealth manager or a portfolio manager would build their career. So something to think about when you are looking in the space is that, what are you comfortable with, and what is the areas that you're looking to get into, because it's a very broad space. So you can either be involved with the product itself, or you can be a bit more agnostic. So for example, a software developer working in the real estate space doesn't necessarily only need to work in the real estate space. They can apply their skill set elsewhere. So I'll maybe talk a little bit about my career path, just to kind of maybe help some of you relate to it. So graduated high school, went to university for a business degree. Didn't really know what I wanted to do at the end of it. I just knew it might be in finance, because after a marketing internship, found out it wasn't for me at all. So that was essentially a very narrow filter, or a broad filter of, okay, I want to do finance. Then once I started working, I was full-time at various lending institutions for maybe about 7 years. Then once I kind of decided that I had an itch to scratch here, when I saw the problem in the market with Perch, and I wanted to solve it. So I left my job about 4 years now, full-time, to work on the startup itself. So yeah, I guess, I was 26 when I started this company, so not necessarily have to be in the space for a very long time, but I mean, I did have a really good understanding of the industry. So really, I saw firsthand just how disconnected all the components of this process were, because like I mentioned, there's a lot of parties in a real estate transaction. You have the realtor, the mortgage broker, the appraiser, the lender, the broker. There's, let's say, 8 or more people, but a lot of them operate kind of in their own silo. But there's not really a platform that ties it all together. And ultimately, it's the customer that actually suffers at the end of the day, because they're not the ones getting the best advice. But most importantly, they're also not able to plan ahead long enough, because most of the time it's very reactive. I wake up tomorrow and I would decide I want to go buy a house, then it's all based on, like, what can I do today? But a lot of people aren't able to put a plan that's holistic in that sense. So Perch is meant to solve that problem. So we help people essentially put together the plans to buy their first home, get into their home, and then do everything after the fact. And we overlay our ecosystem with trusted and vetted professionals, because the other issue is that you need everybody else to know what they're doing and to be really good at what they do. Because you could have a really good, let's say, lender, but then if your lawyer really messes up, then that could kill the entire deal. So you really need everybody to do their part for the deal to go successfully. So we try to tie it all together through us as the central point. And then a lot of the challenges we faced when starting Perch. So when I started the company, I had a background in finance, but I like essentially, let's say I do all the fin, but none of the tech. And the issue with that is that a lot of people have this conception that to start a company or to start a tech company, you need to be a developer or you need to be an engineer. So I mean, I started it. I was able to teach myself enough things to get going, and then I hired an offshore developer so it was really me and one other person part-time when I started out. We bootstrapped our way long enough to generate enough revenue to then start hiring people. And then we raised capital for the first time last year. So we were able to run it on basically 3 years. And yeah, so it is a big risk, but there are a lot of obvious rewards to it, but it's also a very fulfilling thing. So I'd say today, fast forward from the beginning to today, we're now 20 people. We are a fully remote company. We work across Canada. And yeah, it's been an amazing adventure so far. So I'll talk a little bit about areas to get involved in proptech if you're thinking maybe this is something I want to do. So the first thing is network with others, but I'll also emphasize network with people that are outside of your, let's call it, circle of influence. So my biggest mistake when I started is that I only knew people in finance. So I could tell you somebody who works at every single bank and across North America, but that isn't very useful when you need to hire software developers, designers, and et cetera. So get outside of your network, let's call it, and start plugging into different ecosystems. That'll really help you in the long run. And then just overall, like getting involved, whether it's with student associations, industry experts, internships, co-ops, like get some exposure. Courses and certificates. So in your, like, if whatever path you decide to do, if you go to college, if you do a boot camp, if you do a university degree, it doesn't really, I mean, it does matter, but it's not in the sense of none of them will prepare you fully for any of the career paths you take. Because quite frankly, most of you probably won't end up doing the career path that you think you will. Because as you try it out, you'll pivot as you go. But there are so many options out there that you can do for very cheap. It's very cost effective, but it's also like short bursts of information. So for example, when I wanted to start this company, I didn't have enough engineering capabilities. So I was able to learn how to program on using R and SQL using DataCamp, which was basically, call it, I don't know, $500. And then it took me maybe 6 months. And then a ton of courses I picked up on EDX or Coursera. Maybe cost me $200, but it was data science capabilities, using Power BI to do integrated analytics, learning how to do SEO, learning how to use Google Analytics, like a lot of the things that you would need to use. But then you can do it in short bursts. So you don't need to have like a 6-year degree in anything. Like it'll really just be 4 weeks, learn the basics, pick it up, and then learn by doing. So really get comfortable in that mindset of a lot of the stuff you're learning is not going to be obsolete, but there's going to be new skill sets that are constantly being introduced. And it's impossible for you to know ahead of time every skill set you're going to need. So keep an open mind, but then also never stop learning. And then events and webinars. So it's, a lot of you already here. I don't have to preach that to you since you're clearly getting involved and are going to events. But yeah, just honestly keep getting involved. And there's tons of industry level, so tech conferences, tech events, meetups, all these things that are constantly happening, especially the bigger cities. So I know Toronto has a very active tech scene, Calgary, Vancouver, a lot of these cities, actually Ottawa as well. So yeah, definitely get out and about. And yeah, with that being said, I mean, that's a little bit about what Perch does, what the space is, how to get involved. And now it's really a chance for, I'll open up the floor for questions, and yeah, feel free to ask me anything or almost anything. All right, don't be shy if no one has any questions. Oh, here we go. All right, sorry, I missed that one in the. Okay, where did you get the idea to merge these technologies and fields? All right, so where did you get the idea? So the first question was, where did you get the idea to merge these technologies and fields? So when I was working at most of the lending institutions, I could see firsthand how the transaction was happening. So this was kind of like maybe a good way to look at it in the sense of as you build subject matter expertise, you kind of see where the inefficiencies are in the process. So for me, I could see a disconnect between communication, information sharing, and then also just how people actually get their insights. So, should I get a fixed or a variable rate mortgage? Should I rent or buy? Is now a good time to buy a house? A lot of the people that I would see or talk to would really make it on a qualitative basis, in the sense of, my uncle told me now is a good time to buy a house, or, oh, my sister just bought a house and she said it's the best thing ever. So, which is fine. Like a lot of people, especially with real estate, it's a very emotional decision. But there is a huge quantitative element to a lot of these decisions, which is to me why technology was a really good solution, because you can bridge communication barriers, you can bridge quantitative gaps in information, and you can empower users through that decision-making process with a lot of algorithms. So if you're able to build a user experience that's overlaid with all these calculative capabilities, then you're able to, so to me, this was a perfect problem to solve with technology. So it's not necessarily in the sense that technology is replacing everything else. It's really just enabling it to do a lot more. If that answers the first question. I can't see who asked it, but I'll just, if you want me to clarify further, I can always do that. I'll just move on to the next question. What made you focus on fintech and proptech is the next question. To be honest, I just knew I wanted to do finance. I actually had no idea I'd end up in the tech space at all. I had been in corporate, or I'd been on the banking side for corporations my entire career. So in a way, it just kind of happened to be what I ended up in, because when I graduated, I went to Equitable Bank, did a rotational program there to learn a lot about how the banks work. And then ended up just going into the property technology space because I had been working in real estate like finance, but then needed to solve a problem using tech. So then I needed to upskill in that area. But yeah, overall, it just became a bit more of a passion over time as you start working in it, because real estate is such a big thing, in the sense that it touches everyone. So it's motivating because you're solving, it's not a very niche problem, like helping people getting their first home, and then also helping people build wealth as homeowners is the vast majority of people in this country. So that also makes it really motivating. And it's also a very large problem to solve. So for me, that was the challenge, or the ability to tackle a huge problem was also a huge lure. So yeah, there's not really, I guess I had no idea I'd end up in prop tech. It just ended up being the path that I was on. So I guess that's life. Awesome. And then the third question, I mentioned, so the question is, you mentioned that you bootstrapped until you could hire developers. Could you explain a little bit more about what that means? So bootstrap, so basically when you create a company, you're going to have expenses, right? So early on, especially at a startup, you typically don't have enough revenues to cover your expenses, which means you're burning money. So you have losses. Bootstrapping means that you minimize your losses and then also try to get enough revenue quickly so that you're able to minimize how much money you're burning so that you can grow without having to raise capital. So raising capital isn't necessarily a bad thing, but early on, especially if you're able to find ways to generate revenue quickly, then you can grow without raising any company or without raising any capital, which means you as a founder then get to retain a lot of the ownership of your business. So when I say bootstrapped, it means that we were able to basically go the first 3 years with very limited capital going into the business through any external parties. So I had personally built up enough savings in my 7-year career to be able to start this. Because the reality is, when you start a business, you're going to make zero for at least the first couple of years. So I personally had I was making a good salary. I had a full-time job. Then I was making $0 for the first 2 years. So it's definitely a bit of an adjustment, and it's something that you have to be willing to do if you're not going to raise capital. But again, if you do decide that I can't do that, it's not necessarily a bad thing. It just means that you're going to need capital a lot earlier. So you should just be working out that if you can't bootstrap, how are you going to get the capital to grow your business?
Okay, thank you so much. I also got someone who like DM'd a question privately to me, and they asked like, how, actually, let me pull it up. How did it feel to take the risk to start a business at like 26, and what made you like overcome the fear, I guess, aspect of starting a business?
Yeah, so it's honestly it's one of those things of, on one end, like I'm a very risk seeking individual, so it was like the way I always looked at it is like, what's the worst that could happen? So if my business burned to the ground within 6 months or even a year, then like I can always just go back to work, right? And at the time, like I was renting a condo in downtown Toronto. So it's like rent wasn't that expensive necessarily. I mean, compared to today, it was quite the bargain. But essentially, like, I had rent, very minimal expenses other than that. So it's not the end of the world if I had enough savings to kind of carry myself over for a number of time. But I think like when you actually do it, so you have to first be really like, you don't have to quit your job and go directly into your business like on day one. I think you can spend a lot of time validating it first. So for example, I was able to put together proof of concepts, like a very basic MVP product. And I did a lot of market testing, user research to validate like, hey, is this a good idea? Or is this just like something that I think is cool? And then once I had enough validation after maybe 4 or 5 months, then I quit my job. So you're able to kind of do this as a side hustle for quite a bit of time where you're then mitigating the financial impact. But then once you do make that plunge and you're like, I'm going to go full time, it is a huge adjustment because you're, like I said, most likely going to go from making a salary to making zero. So you need to have a plan for that. So you're not going to be able, if you've only got 2 months, 3 months of expenses like built up in your savings, that's not enough to do it. Like you should be really building for like, I'm not going to get anything back for potentially at least a year. Again, it all depends on the business model. Some business models can make revenue very quickly. But then if you're not comfortable with that, you could get somebody, raise capital early, and then you can start where you can have a salary, but then you're going to give up a good chunk of your company early on. Other ways you can help reduce the impact when you start your business is if you have co-founders, it honestly takes a lot of the load off. So I started my company alone just because I didn't have a co-founder. But I can definitely say that it would have been nice to have one. Because one, it's a lonely journey. So make sure you've got like your network as you go through it, because you're just gonna be working alone all day on a problem before you really start working with anyone else. So you want to make sure you look after yourself, but then also there will be an endless amount of work, and then it's really you who has to create your own schedule. So when you're in a corporate environment, it's very structured. Like you know exactly what you have to do from Monday to Friday. You're working from 8:30 or like from 8 to 5 or whatever your timeline is. Maybe you work overtime every now and then. Not a big deal. It happens. But when you're starting your business, like every problem is your problem. You're not able to turn it off. You are always on, and you'll be working way more than that. So you have to be ready to kind of accommodate that. So everybody's in a different stage of their life. Everyone has a different risk tolerance. So it's not like starting a business is impossible if you can't do everything. You just have to be realistic about what you can and can't take on, and then plan accordingly. And then I see another question here. With rising interest and mortgage rates, is your company looking into any operational changes? Not really. So, I mean, I'll just assume by operational changes, like you mean like, does that affect our business model? So the first step, so I'll maybe just talk about a little bit about how it works. So as a mortgage brokerage, we get paid a transaction fee whenever a mortgage closes. So if property prices are going up and down, assuming people are still transacting, so people are still buying homes, which means they're going to need a mortgage for it. So we're still making money that way. It does shift the product mix a bit. So for example, no one's breaking their mortgage early anymore to lock in a lower rate, because essentially anybody who got a mortgage in the last 2 years, actually at this point, almost the last 3 or 4 years, would be locking in a higher mortgage rate than they had before. So renewals are only coming to us at end of term, and then refinances are getting more expensive because I wouldn't want to break, let's say, my 1.9 5-year fixed mortgage to get a 5.5 mortgage today, for example. But there are now a lot more opportunity on because we actually have a mortgage brokerage and a lending arm. So our lending arm is seeing a tremendous amount of opportunity by people that are looking for alternative financing solutions that essentially could enable them to save a lot of money. So I mean, at a high level, like we're easily going to triple our revenue this year compared to last year. And our team is also going to keep growing. So we're 20 people. We're probably going to be 23 or 25 by the end of the year. So yeah, everything, it's like all cylinders are firing for us. And it's really just a matter of like it changes the mix, but it's still a very good market out there for us. But all good questions.
I have another question that was sent privately, which is how do you hire employees for your business when you just start your business? And do you ever worry that no one will go for the new job since your business is new?
Yeah, no, it's a good question. So yeah, so I'll break that down into a couple parts to that question, actually. So the first one is in regards to like, how do you manage the fact that your business is new? Because it is a legitimate concern. Like I remember the first 2 to 5 hires that I made, that was a lot of their questions of like, how are you funded? Is my job still going to be here in a month? Because it's obviously, if you're going to quit your job to go work somewhere else, you need to know that that company can keep paying you. And it's not like they have like 2 months of runway left. So these are questions that like in the interview process, you definitely want to be able to, like, one, if you're in that position, you should be asking these questions of how are you funded? How long are you going to go? And the second question is like, if you're the interviewer, you should be making that part of your job description. So like in our corporate description, we would talk about how we were funded, what our business model was, why we have, so you want to kind of point to the continuity of it. And then try to build validation. So if you have funds that you've raised, highlight that in the sense of that's how I'm going to be funding it. If you have grown through your own revenue model, highlight that. Like we are a cash flow generating business. Like we are profitable. We've been profitable for 2 years. We've been operating for X amount of time, et cetera. So that's typically, I find, a bigger concern for people that are more like looking for salaried positions. If you're super early on and you just started, at that point, you're typically looking for someone who's almost like a co-founder. So that person's going in with the expectation that they're probably going to have a lot of equity and they're probably not going to have a lot of salary anytime soon. So then you have to be able to advance that discussion of like, look, I can't pay you that, like, your salary because I don't make money. But I'll give you X% of the company, and then let's talk about what your salary is going to be over the years as we grow to profitability. So whenever you look at compensation, the people that you bring in at the very early stages are going to be very different than the person you're bringing in when you're profitable. So you should look at it in the sense that I have base salaries, I have bonuses, I have equity, and then I have options that I can put into the company, and you should be structuring job packages around that. But then you also want to make sure you do it effectively. So like get a good lawyer to build these agreements, because you always want to plan, I guess, what's the expression? They say you plan for your divorce while you're happily married, kind of thing. So lay out the agreements. What are the terms? Because I've seen it happen many times where somebody will bring in a co-founder, 6 months in, that co-founder is no longer interested, but now what? You have to buy them out. So have somebody vest their own equity. That's what they call it. So when you vest equity, it means, let's say over 3 years, you're going to get 30% of the company. That means it's going to be 10, 10, 10. That means that person has to commit for at least 3 years to your business. So you want to make sure you're not just giving away equity with no strings attached. Like, people have to deliver value to get value. So make sure you're protecting yourself in that sense. And then also make sure that you're, just in regards to like actually getting people, you have to be able to justify how you're going to pay them. And you also, like, just from an ethical standpoint or a moral standpoint, you should actively be doing that as well. Like, you should never make somebody quit their job if you can't pay them for more than 2 months. Like, that's just, just overall not a good thing to do. And also the last thing is interviewing. I'll maybe just comment on this very quickly. So if you're hiring somebody who's doing the job that you do, it's very easy to assign or to assess like who's good or bad at their job, especially if you're experienced and you've been doing it for a while. So for example, I had hired many financial analysts when I was at the bank, so I had a very good understanding of what a good financial analyst was or wasn't. But then I had to hire my first software developer. I know nothing about software development. So then that was obviously a challenge, because like, how can I assess if this person's good or not at their job? Because I have no idea what they do. So at a base level, what I'd recommend is that the first thing is, when you're hiring for hard skills, bring in advisors, bring in friends, like find connections in the industry. So you could bring in, I was able to build up an advisory base of people that were good at all the things that I had know nothing. So social media, digital marketing, software engineering, design, and then I would have them help me in the interview process. Which one was good to assign hard skills. But the second thing is also, no matter what you're interviewing for, you can always assess the soft skills. So do they have the right attitude? Are they going to be a good fit? Are they believing in your product? So for example, with a software developer, I would make it a proof of concept. So build me this calculator that does X, Y, Z, and then explain how or why you built it the way you did. So I don't know I don't know the stack that they built it in. But then as they're walking me through the product, I can see if they have attention to detail. I can see if they understood the requirements. And then as they explain it to me, I can also see like if they respect or how they're going to work with product. Because some people will be a bit pretentious about it, then they might not have the best attitude. So I guess don't sell yourself short in the sense that you can assess a lot of things about a skill set without needing to know what it is necessarily. But make sure you bring in somebody who does know what they're doing in that hard skill so you don't have any blind spots. Let's see here. All right, next one. What do you think are some of the biggest challenges in your industry? Oh man, let's see here. There's like a million. So I'll speak to the real estate sector in particular. So the thing with innovation is it is an element of, you have a bit of a your weakest link, or the lowest common denominator is your weakest link is your greatest weakness kind of thing. So let's say we want to innovate as much as we possibly can on the broker space, but if the lender doesn't want to innovate as quickly as you can, you are tied to their level of, or their pace of innovation. So something to think about whenever whatever sector you're going in is that if you have a lot of pieces in your supply chain, so in our case, we have the realtor, the broker, the lender, the appraiser, etc., you can only go so far without it having to have some kind of reciprocation, or like everybody else kind of being on the same page. So you might have this utopian vision of what everything could operate at, but then you're going to have some realities that like not everybody's going to move at the same pace you can, for a variety of reasons. It might be because they don't want to. It might be because there's a lot of regulation that's preventing them from moving as quickly as they can. And you have to really understand not just the business or your business, you have to understand their business, who their regulators are, what their goals are, what their timelines are, what their progress is, and you want to build around that. So that's really something to be cognizant of, is that real estate is one of the, I'd say, oldest industries. It's also one of technologically it's behind on a lot of factors, but it's still massive, and a lot of people make a lot of money in the space. So it's something that people have massive vested interests in seeing continue, and they're open to change, but they're they're open to a different pace of change that you might have in mind. So you have to make sure that you're able to work at a pace that's quick enough while respecting everything else that you need to have happen. And then another question is, have you hit any major roadblocks in the past 3 or 4 years, or have you found that everything has gone according to plan? Sorry, there's like literally no way anybody, yeah, there's no way everything goes according to plan. Oh man, I wish. Oh yeah, so where do I even start? You'll make some bad hires. You'll have people that weren't what you thought they were. You'll make pivots to your business product. You're gonna talk to your users and they're gonna tell you that your product is awful. Or not awful, but like it doesn't solve a big enough problem. So for example, like I'll just speak to some of my personal experiences. So when I first started, I had a tendency to like want to like just stuff features into product, because that's to me what was interesting. So a ton of calculators, a ton of analytics, all these things that I'm like, look at how cool this is. But like, I'm not the average consumer, nor am I my target market specifically. So me building all these calculators isn't going to grow the business. So it's a waste of resources. So I think really you are going to hit roadblocks. You're going to have referral partners that don't end up delivering on what they said they would. You're going to have employees that don't deliver on what they said they would. You're going to have investors not pan out. You're going to have so there's going to be a lot of downsides, but you're going to also have a lot of like pleasant surprises. So you have to really be able to like stay steady through the rough patches, but then also appreciate the highs. Because you're going to have deals come through you never thought would. You're going to have hires that you never thought you'd find. So there's the good, the bad, and the ugly, I guess, as they say, and it is going to keep coming. So nothing really goes according to plan ever. So whenever you plan, like I plan in 3-month bursts. I obviously have a long-term vision, but I never assume that I don't have a 3-year forecast and expect to hit it. because so much can change in just a couple months. How did you build a network with other people outside the finance sector when you decided that you wanted to start a startup? What are the best ways to do cold outreach and build relationships with people when you don't know anyone? Yeah, really good question. So for me personally, I started attending events. That was the first thing I did. So I went to FinTech TO, Tech TO, even random meetups. I think there was one, it was called like Coffee and Coding. So I'd take my laptop, I'd go to this coffee shop, and it was just a really weird experience because if you go to like a finance event, it's typically there's a lot of like there's always almost always a beer involved and everyone's talking. Then you go to this coffee and coding event and there's people drinking coffee and almost no one's talking because like they've all got like their headphones in and they're all just coding away. So it's obviously a different culture, and it was just kind of cool to meet people that way. And then as you meet people in through those experiences, as a founder, you'll have other groups of founders, and that honestly is probably one of the best communities you can get involved with because those are really people that'll understand what you're going through. Because people will be like, oh yeah, no, I'm sure it's hard. Like I work a lot too. It's like no, like it's a very unique thing to go through creating a company because there's so many parts of it that are really hard to relate to. So if you have these founder networks, it's so powerful because like one, they're your sanity check. They're a good sounding board if you find some good ones. But then they're also usually going to be in other industries. And then they're also going to have software engineers, designers, developers, like all these other people. So you can get connected through their networks. And then over time, what you end up start to do is then you'll hire people that are in those spaces and they'll have their networks. So it's really kind of a bit of a snowball effect, I'd say. So put yourself into events and conferences where there's people that are from a different area than you. Meet a couple, they'll have a network. Try to connect with them, bring them to your events. So try to add value to their network as well. So I guess what I'd say from a cold outreach standpoint is sure, like you can send the LinkedIn message to somebody. Like maybe the first place to start is with your alumni. So if you went to one school, typically they'll be able to show you who graduated from there, and you can kind of filter through it and reach out to people. Typically, if an alumni reaches out and they want to get career advice, they'll almost always say yes. So that's a very warm intro, and it's likelier to happen. Then you can start reaching out to people that you have maybe mutual connections with. If you don't know anyone, like by all means, like you can still reach out, but it's honestly just one of those things of, it's not because people are rude. It's just imagine if you're getting 10 of these or 20 of these a week and you're already trying to do all these other things, like you just don't have the time, right? So try to find warm intros. They're likelier to convert. And then also just try to look into like, it's one of those concepts of the more you put in, the more you're going to get back. So try to help other people build their networks and then they'll reciprocate and help you build yours. So look at it in the sense of I can help somebody else do what I need to do. And then it'll also benefit me. So that's maybe some of the tips I'd have in regards to that side of things. The next question is, how did you self-teach a lot of technical skills on EDX and other platforms? Did you find it was comparable to your university degree? Yeah, so I'd say, I'd say like when you get a university degree, so I did a 4-year business degree. It's not necessarily that means I know everything about business. It's more of like a mindset. Like it teaches you how to look at things from like I know that sounds kind of weird, but it's really how do you analyze things from a finance standpoint? Like what is pros and cost benefit analysis. So even like, so no matter which undergrad you do or which degree you do, it'll teach you a very different way of looking at things. So if I look at a problem, or like somebody in social sciences or political science looks at a problem, we'll look at it in a different way, which isn't a bad thing. It just means that we have a different way of kind of maybe framing a problem. So when you're teaching yourself technical skills, I think it's different because if you have the baseline of like, I can analyze a problem and do it well, then technical skills just enable you to do it at a higher degree. So what I mean by that, so I learned how to use R. It actually helped me tremendously in my job because I was able, I used to think Microsoft Excel was the coolest thing on earth. But then once I learned how to do R and then SQL and Power BI, I was automating huge components of my job that I didn't even know was possible. So I think technical, so if even like, let's say in anything, like really any career, I think could benefit from some kind of augmentation of their skill set, because that's the whole point of training, is you can do things better than you know, but then if you don't know how to do it, you have to learn a technical skill to do it. So on EDX, like where I'd say those are really useful is that the university degree gets you things that so you can't just do EDX. So for example, your university degree gets you a network because you'll have an alumni base you can tap into. You'll have colleagues that you went to school with that'll go get careers that you can leverage. So your network and the degrees and the connections and all those things that you get through schooling are not replaceable through an online degree. But a lot of the skills you'll pick up on EDX, like, for example, how to use Google Analytics or SEO for dummies, basically. I wouldn't need to go get a degree in SEO. It's just something that like I'll need to use. So I need to understand the basics before I can jump into it. So it's unless you have somebody you know that can teach you how to do it on the job, or you get a job and you learn how to do it. Those are also really good things. But if you're not going to learn that skill on the job, you have to think of like, this is a really cost-effective and easy way to kind of DIY, learn enough to make yourself dangerous, and then go out and do it. From your experience, what can we expect from the fintech and proptech industry in the next few years? So I think right now markets have cooled quite a bit. So I think there's going to be a lot less capital going into the space. That doesn't mean there's going to be no capital. There's just going to be, it won't be as frothy as it was the last couple of years, which is not a bad thing, because right now there's like what ended up happening is there was so much money in the space is that it was hard to find people, quite frankly, like the talent, like there was a huge shortage. Like it was such a tight labor market. People were getting massive salary inflation and it wasn't sustainable. So this will help normalize it a little bit. And then the fintech and proptech industry, I think, will still remain pretty hot because, especially in Canada, like proptech is going to be a massive space because, especially for the average Canadian, like real estate is part of everyone's or almost everyone's real estate portfolio. So there are still massive problems that need to be solved. And Canada, relative to other countries, has an even bigger gap, I'd say, just because of the way that our finance industry is really structured, is that we have, let's say the big banks have a massive chunk of the market share of the entire industry. So even like they're putting in resources to innovate because they want to stay ahead. But relative to other countries, there's a lot less, let's call it competition, in the sense that there's now more room for innovation. And I think a lot of people are making big bets on that they can take a big chunk from the banks. And the banks are going to spend money to make sure that people don't take a chunk from them. So I think there's going to be a lot of resources being deployed because this is such a big area that touches on so many people. Where do you see Perch going in the next couple of years? All right, let's see here. Next couple of years. So we're going to keep growing out so right now we've really focused on like finance as an enabler. We're going to be scaling our growth acquisition channels, the quality of insights that we're able to actually offer consumers. So for now, we have a lot of, let's say, mortgage advisors that are able to leverage analytics, but we want to take it further where we're actually using AI and ML to help automate the process of optimizing someone's path to home ownership. And we want to reinforce that with lending. So imagine a scenario where, regardless of your situation, we're able to kind of put together a path where it can tell you exactly how to get to home ownership. And then it starts overlaying the product suite that would be needed to do that, auto adjudicates it, and then advances the funds. So being able to tie that experience is really key. So that's why we're really putting in a lot of resources to build the intake. So how do we build a reliable intake funnel? So realtor partnerships, wealth advisory partnerships, direct to consumer customer referrals. So building your engine of growth, and then really overhauling and improving the customer experience once they're in your platform to help you solve more of their problems. And not necessarily just more of their problems, but how do you actually, are you able to help more people every time they come to your platform? Because you want to have enough impact where you obviously you can't help everyone. Like your product's never going to solve everyone's problems. But right now we see a lot of opportunity that we can help more people than we are now through an automated mechanism. You can always have manual overlays, but then that's not very scalable. So that's really our focus for the next couple of years, is to build that out. You mentioned that you're risk tolerant in general, but was there a missed opportunity that you wish you had jumped on? Not particularly. I mean, there's always like, the hindsight 2020 mentality. So I always think that like I'd like to think that I make the decisions I can based on the information I had. Sometimes I make the wrong decisions. Sometimes I make the right ones. You just hope that you make more of the right decisions than the wrong ones, and the wrong ones aren't fatal. So that's really it. It's like your risk tolerance will help decide how many of those decisions you feel comfortable doing. But it doesn't necessarily, I mean, I'll highlight that like somebody who accepts risk doesn't necessarily make them like crazy or maybe even negligent. There's such, like, you have to look at it from a calculated risk standpoint. So you shouldn't be just like throwing your life savings into your business because you're convinced it'll work. Like the reality is most businesses don't work. So you have to kind of go in being realistic. So there's a lot of elements, and like it's easy to get lost in that in the tech space. Like you'll see people going out for just ridiculous valuations and tons of money. that then go bust not that long after. So if you go in with a good business model and you stick to it, but you're not afraid to adapt to it, I think calculated risk is really how I'd emphasize it in that sense of there will definitely always be missed opportunities. But there's also such a thing as like, you don't know how good of an opportunity it was most of the time, because there's always a shiny object that you can get distracted by. But if you stick to your core business and what it is that you set out to do, it should work out for you in the long run. Because you don't need to do everything right to be successful. You just have to hope you do enough of those things right. Especially when you're limited in resources. Like it'll be you, maybe two other people. So it's like, there's only so much the three of you can do. So you have to focus on like, what are the highest impact areas I can focus? And then maybe one day, when you're 20, 30, 50, 100 employees, then you can start doing these other things. But until then, you have to really think of like, what's the highest, like, where can I get the highest ROI return on investment of my time? And then the last question that I see, how do you find a good co-founder? What qualities do you look for? Oh man, this is like, how do you find a good spouse? Like the reality is there's honestly I wish I could give you a checklist, because like, I wish I had one too. There's honestly no area, there's no library, meetup area, like chat channels. There's no area where you can like just go and find one kind of thing. A lot of the times I've seen where I find the most success for co-founders is there's a lot of campuses, so universities or colleges or programs that you can go to where there's almost like a cross-pollination effect, where it has like a group project where they'll have somebody from a business degree and an engineering degree, or they'll have someone with a law degree and a psych degree, or whatever it is. And they'll have different departments join forces for a project. And that'll be actually how a lot of people meet their co-founders. So I think like while you're in school, this ties back to my previous point of like, if you're networking in other groups, that honestly is probably a really good way to find a good co-founder. Another way is honestly for people that are serial entrepreneurs. After you start your first business, so like, let's say for example, today we now have 20 people. These are people that could easily be like, some of my employees could easily be a good co-founder for a next venture if there was one. So I think like, as you start working, you'll work with other people. Once you go to school, you'll have other people that you know. So I think it'll be through exposure that you'll find out who is somebody that I work really well with and that complements my skill set. Because obviously a good co-founder is typically not going to be somebody who does exactly what you do, or else what's the point? Especially when you're early on. And then what qualities do you look for? So I think, again, assuming you put all the legal protections in place where you're going to put like, you need to be realistic when you start. People will drop out, people will lose interest, life changes will happen, they might move, they might have a kid, they might switch jobs, whatever it is. So you want to make sure that you're building an investing agreement that aligns interest and keeps them motivated to stay in. So I'd say if you do all of those things well, it increases the likelihood that your co-founder will deliver on what you think they would, and also the things that it's not like you might be the one that ends up bailing, not your co-founder. So it has to be enough to keep everybody interested. You also have to be realistic about what's the value that people are bringing to the table. These are the things you should be addressing like upfront. You shouldn't be starting the business and then talking about it later. If someone's going to do a lot of this work, if someone's going to do a lot of that work, or somebody can only commit part-time, somebody can commit full-time. If someone's going to put in 100 grand, someone's going to put in 10,000, or somebody can't put in zero. These are all factors that contribute to the business, and you have to be able to divvy up equity based on what you think is fair. So making sure, so I'd say if you're able to agree to fair terms, and quite frankly, a lot of the times people can't come to terms, and that'll save you the headache up front, because then you know that you would have had something good or not. And then the second thing is in regards to, so from a quality standpoint, just think about your business in the sense of if I could clone myself, go to school and learn another skill set, what would it be? That's probably the person you should hire. So for me, our particular product, I knew a lot about mortgages. I was able to build the algorithms. I knew the industry. I had the connections, but I knew nothing about technology. So if I could have had a co-founder, I would have picked somebody who knows software development. But a lot of the times, like I know some other companies, like their co-founder was somebody who was like a chemical engineer, because they had their product was like a chemical compound. There's honestly, it doesn't always have to be a software developer that's your co-founder. So I think it just comes down to complementary skill sets of like, what are the two core things that I need to have? And it also comes down to like, what can I hire for? Sometimes you might not need a co-founder. You just need a fractional, like let's say employee. So what if I could have a CTO for 10 hours a week? Maybe someone's open to that. There are a lot of people out there that have full-time jobs that want more out of it, that are open to dedicating 10 hours a week or something like that to help you with your business in return for sweat equity. Maybe they don't even need to get paid for it. They just want to be part of something that they feel is important. So you should always be looking at all of these things in the sense of, do I need an employee? Do I need someone full time? If I don't, they could be an advisor. They could be a fractional employee. And if I need them full time, then yeah, that's probably somebody who should be a co-founder if you have someone. But if you don't have the right person, don't force it, in the sense of, I can almost guarantee you will regret it. You'll regret it later. Something will get started, but then you'll get stuck. Just to give you some of the worst case scenarios that I've seen, you're 1 year in, your co-founder decides they want to leave. You still don't make enough money. You haven't raised any capital, but now your co-founder decides they want to leave. And the only way to do that is you have to buy them out. So like, where are you going to get that money? So now you're going to have to go raise capital where your co-founder is leaving. It's not going to look good to investors. So it just puts you in a spot where you're probably going to have to like kill your own savings or lever your company. And now you're basically, but that capital is not building anything. You're just now buying someone out. So it's a complete waste of investment. So these are the things you want to really avoid, because it can be pretty fatal later on.
Okay, awesome. Thank you so much, Alex, for answering those questions. I think we're nearing the end of our webinar time. So are there any last final questions from any of the participants that you're dying to get answered from Alex?
Yeah, these are all good questions. And I mean, again, everybody might have a different perspective. I'm just giving it to you from, I guess, what I've seen.
Yeah, amazing. Okay, I think that concludes our first keynote session at Finovate. So thank you so much, Alex, again, for taking the time out of your day to share your experience. And thank you all to the participants for coming out. We hope you enjoyed this session and were able to gain some insightful knowledge about the fintech industry and the proptech industry and its numerous applications. And we hope to see you all soon at our next session happening on June 28th. Thank you, everyone.
All right. Bye, everybody. Have a good weekend.